This is the COVID-19 HR and financial advice for Northeast Minnesota employers update on 4/14 of 2020. So this is the second webinar we did. We had a couple technical difficulties last week, so I'm re-recording this portion of it. So my portion is the tax portion, tax deadlines, recovery, rebates, tax credits, and other updates. So I'll be going through this section, and we will have this uploaded for you. We'll have two sections, one for the HR and one for the taxes. And so let's get moving here. Okay, tax deadlines updated. So we are, you know, the government did a couple things regarding the coronavirus that occurred. And kind of the first tool in their toolbox was related to the tax deadlines. So the 2019 income tax filing and payment deadlines for all taxpayers to file and pay their federal income taxes on April 15th are automatically extended to July 15th of 2020. This relief applies to all individual returns, trusts, corporations. Relief is automatic. You don't have to do anything. You don't have to file an extension. This has just been extended to July 15th. Penalties and interest that you'll pay will not begin to start accruing until July 15th on all taxes due. So up until that point, we're not going to have any penalties or interest. And again, this is automatic. This is nothing that you need to do. Minnesota is also in compliance with the federal government, and the individual tax filing is due on July 15th of 2020, along with the balance due payments. So again, Minnesota, balance due is not due until July 15th. Now, Wisconsin is also in compliance. I don't have it on my slide here, but Wisconsin as well, July 15th. So any Wisconsin residents don't have to worry about that until July 15th. One potential change is Minnesota is not in compliance with the federal on estimated tax payments, of which are the quarter one estimate is still due on April 15th, which was last week. But it is due on July 15th for the federal. Now, I did not double check over the weekend. I know there is some talk about Minnesota extending that after the fact. I have not seen that official extension yet, but I wouldn't be surprised if they do. Let's talk about the recovery rebates. This has been a big area of questions for clients. So each taxpayer would get $1,200, joint filers would get $2,400. Each taxpayer would also get a $500 per qualifying child with no limit on the number of children. Income phase out start at $75,000 for single filers, $150,000 for joint, and $112,500 for head of household. The amount of your check is reduced by 5% of your income over the phase outs. You must have a valid Social Security number, filed a federal tax return for the year 2019 or 2018 if you haven't filed in 19 yet. So there is an update on this. Since the original webinar we did, there's been some guidance that came out. So the recovery rebates, there's a new portal with the IRS for non-filers to input their required information, which the IRS will use to confirm their eligibility and then calculate and send them a payment. So this is the link on the slide here. So the information needed is your full name, current mailing address, and email address, date of birth, and valid Social Security number, bank account type and routing number, and the account number, identity protection, personal identification number, the IP PIN. This is if you have been affected by fraud in the past. You're going to get a PIN or a code for that to enter. Driver's license ID, or driver's license or a state issued ID, and then for each qualifying child, name, social, adoption, or the adoption taxpayer identification number and their relationship to you or your spouse. So this particular link is for non-filers. So this is for individuals who for one reason or the other have not filed taxes in prior years. Mainly maybe their income was below the requirement, but this is where you would go to update it. Now, one thing that has changed from last week is There is a new portal for current filers to log in and check your payment status, confirm payment type, and also enter bank account information if it is not already on file. New feature states that it will be ready on mid-April. It is actually available on April 15th, and there's a link for it. Now, I've gotten some feedback on this link. One is if you filed 19, there's no updates that you can do. If you haven't filed 19, you can update your checking account number, and you can update your direct deposit. But one thing that I've heard is to be very careful on this, because if you get locked out of this, whether you enter something wrong or if you get locked out, there's a potential where you're locked out permanently. It's hard to reset. So that's some of the feedback that I've been reading is if you do get locked out, it's tough. So I would just be careful when you're entering this information in. But this is a way where you can check the status of your payment, which I think is key. A lot of people are curious about their payment, and then confirm the payment. You know, you can update your direct deposit info. Employee retention credit update. You know, this was a credit available against certain employment taxes, and it's equaled up to 50% of the qualified wages an eligible employer pays to employees after March 12th, 2020, before January 1st of 2021. Eligible employers can get immediate access to the credit by reducing employment tax deposits they are otherwise required to make. If the deposits are not enough, you can get a credit to carry forward. One of the big questions is, how do you get the credit? Well, there's a new form out there, the form 7200, which you'd fill out. Now, the thing to keep in mind with this credit is if you have the PPP loan, you do not qualify for this credit. So it's kind of an either or. Right now, most of our clients are applying for the PPP, have not seen people start using these credits yet, but I think there are some businesses that are definitely going to benefit from this credit when the PPP may not have been as effective for them, I guess. And so again, any of the wages, you can get up to a 50% credit, up to a max. So up to a $10,000 max. And so again, good credit. Finally have the form available. It's pretty straightforward as far as payroll forms go. And this is a form you do to request an advance credit. So employers, including the tax-exempt organizations, are eligible if they operate a trade or business during the calendar year of 2020 and experience either a full or partial suspension of the operation of their trade or business, or a significant decline in gross receipts. So business suspended or a decline in receipts are the two qualifications for this. So there is a definition for what a significant decline is according to this. First day of the calendar year 2020, for which the employer's gross receipts are less than 50% of its gross receipts for the same calendar quarter in 19. So they're doing a comparison of 19 to 20. On the first day of the calendar year quarter following the calendar quarter in which gross receipts are more than the 80% of the gross receipts for the same calendar quarter of 19. So there is this kind of formula that they're doing. And, you know, this is a calculation that's going to need to be done to see if you qualify for the credit. Really, it's a comparison of the current period to the prior period to see if your revenues are down enough, gross receipts are down enough to qualify. Credit applies to qualified wages, including health plan expenses, paid during this period or any calendar quarter in which operations were suspended. Paycheck protection loan. So this is the one that has been all the rage. The recent news is they've run out of funds. In the next day or two, it sounds like there's going to be a vote in the Senate and then the Congress to refund this for another $250 billion. Waiting to hear, we should know by mid this week. So Payroll Protection Program. The original CARE Act authorized $350 billion for 3 months of 100% guaranteed 7A loans to cover payroll costs, interest on mortgage payments, rent obligations, and utilities. Applies to businesses with fewer than 500 employees or those that meet the SBA's current size. Also applies to self-employed individual contractors, and it applies to certain nonprofits. So this was the original CARES Act loan that came out. Again, funding has run out. They're not currently taking applications, but I believe in the next couple of days, we're gonna have additional funding on this one. Maximum loan size for borrowers is capped at the lesser of 250% of the average monthly eligible payroll costs. So look back at 1 year, relevant period for seasonal businesses, or 10 million. Interest rate is capped at 4%. The actual interest rate that I've been seeing is 1% on the loans that have been approved. Portion of any loan issued as part of the PPP up to or equal to 8 weeks of covered expenses will be forgiven by the SBA and paid to the lender plus interest. Need to apply through an approved lender. Now this is where I've been getting a lot of feedback as well. People have been having the most success using the community banks, regional banks. Certainly I've heard people going through some of the big name banks, the national banks, but the folks that I've been talking to that have had the best luck and the smoothest process has been on the smaller community banks. So I'm recommending to people, you know, right now they're not taking any loan applications, but I believe they will be again. I'd reach out to some of the community banks that you either have an account with or work with and talk to them about the programs right now. So update, April 3rd, the application process opened up for business, and on April 10th, the application process opened up for self-employed individuals. And again, shortly after the April 10th opened up, they ran out of funds within a couple days. So requirements. Consistently, every bank is slightly different on the exact forms that they want. Some want an application from the bank along with these, but consistently we've seen the requirements as follows. SBA loan application, payroll records, Form 941 for all 4 quarters of 2019, prior year tax returns, 2018, while 2019 returns have been requested. I haven't seen that as a requirement as of yet. Some banks are requesting a loan application for their banks as well. Pretty consistently, it's payroll information. As far as the newest self-employed, I haven't seen many of these applications go through yet. We may do an update in the future on those applications for self-employed. And their definition on that is really you don't have any employees. It's pretty much you. So a handful of clients have been funded, seeing the process take about 2 weeks. Some have gone more quickly and some have gone slower. But I'd say on the average, from the time of application to the time of approval, potentially getting funds, it's been a couple weeks. The big question is, you know, all the guidance came out to qualify for the loan. What information you need? What's the application? That has been kind of a changing target. Well, now this funding is starting to hit. And so what is the requirements to get it forgiven is kind of this next set of questions. And this again has been changing. We're looking at guidance, we're looking at our recommendations, and I'm really taking it at face value until we get some other guidance, which is over the 8-week period. Now, what I've been finding is the loan date on the loan documents is within a day of funding. And so what I'm telling folks is if your loan date on the document pretty closely matches the date you got the cash, that is the period that it starts. So the clock starts ticking on the date of the loan. You have an 8-week period to pay expenses, and there's some ambiguity out there on what really qualifies. You know, what's a utility? But our stance at the firm is we're going to say gross payroll, state unemployment, health insurance, retirement funds matching, utilities, rent, and or interest on mortgage debt. And that is it. So there are some talks about different benefits for employees, those types of things. I'm taking this as face value. So my recommendation is the date of the loan is your starting period. For an 8-week period, these are the core expenses that you're going to pay for forgiveness. As more guidance comes out, we'll do an update. But for right now, you have this 8-week period. So one of the questions is, let's say I get the loan on the 1st, and the 2nd, I'm making a payroll, I'm paying payroll for the 2 weeks prior. Does that count? And my answer is yes. I'm looking at this 8-week period, and the expenses that you pay, even for the prior period, are going to be included. So if you pay payroll on the 2nd, you got the loan on the 1st, that's going to be included. But if you get to the end of the period and a day or two after your 8-week period, you have a payroll, I wouldn't say that is included at this point. So you just have to be careful on your 8-week period. Make sure you're getting the proper expenses in there. So we ended up getting some questions on the last one that we answered. My contact information is here. Feel free to check out our website. My email address is on the website as well, or you can just give me a call if you have any additional questions. Thank you very much.